Have you ever wondered how to start earning passive income with just $1,000? Welcome to the world of passive income, a financial strategy that can transform the way you look at your money and your life. Do you want daily tips for your financial future success? We want to build a like-minded community for those seeking a financially secure future and freedom. Subscribe for daily uploads and tips. Imagine a scenario where you don't have to trade your time for money, where your earnings aren't tied to the hours you work, where you can make money while you sleep. Sounds too good to be true, right? Well, that's passive income for you. Passive income is the money you earn that requires little to no effort to maintain. It's money that flows into your bank account regardless of whether you're working, playing, or even sleeping. It's a revolutionary way of thinking about income, breaking away from the traditional model of exchanging time for money. Now, why is passive income so important? For starters, it gives you financial freedom. This means you are no longer tied to a job or a location. You can work when and where you want, or not work at all if you so choose. Your income is not dependent on your daily grind. Secondly, it provides you with flexibility. With a steady stream of passive income, you can take risks, make bold moves, or simply enjoy life without worrying about the next paycheck. This flexibility extends to your personal life as well, allowing you to spend more time with family, pursue hobbies, or travel the world. Thirdly, passive income offers the opportunity to grow your wealth over time. The beauty of passive income is that it can be reinvested to generate even more passive income. It's a snowball effect that can lead to substantial wealth accumulation in the long run. So, what's the catch? Well, the initial setup requires some investment, but don't worry, we're not talking about millions here. In fact, with as little as $1,000, you can start your journey towards passive income. So, with just $1,000 in your pocket, you are ready to embark on this exciting journey towards financial independence. The path ahead may not be easy, but the rewards are definitely worth it. Let's dive in and explore the world of passive income together. Before you dive into the world of passive income, it's important to understand your current financial position. It starts with understanding four key elements: income, expenses, savings, and debts. How much you earn, how much you spend, how much do you save, and how much debt you have. Knowing your financial health is a crucial first step towards making wise investment decisions. Now that you understand your financial position, the next step is to explore the myriad of investment opportunities available. Let's dive right into it. The world of investment is vast and varied, providing a spectrum of opportunities to generate passive income. With $1,000 in hand, there are several avenues you can venture into. Stocks, bonds, real estate crowdfunding, and peer-to-peer lending are just a few to mention. Take stocks, for instance. They offer a slice of ownership in a company and can potentially yield high returns. However, they also come with a degree of risk. It's like a roller coaster ride. You can experience highs and lows. But with careful research into the company's performance, market trends, and economic outlook, you can make informed decisions. Bonds, on the other hand, are safer but yield lower returns. When you purchase a bond, you're essentially lending money to an entity, like a government or corporation, in exchange for periodic interest payments and the return of the principal amount when the bond matures. Then there's real estate crowdfunding, a relatively new kid on the block. It allows you to invest in commercial real estate projects like apartment complexes or retail spaces without the need to buy the entire property. You become a fractional owner and earn from the rental income and property appreciation. Peer-to-peer lending is another interesting option. It's a method where you lend your money to individuals or small businesses in need through online platforms and earn interest over time. It's like being a mini bank. But remember, before you dive into any of these investment opportunities, do your homework. Research is invaluable. Understand the risks and benefits, study the market trends, and make sure whatever you choose aligns with your financial goals and risk tolerance. Choosing the right investment is a critical step towards earning passive income. So take your time, don't rush. Your investment journey is a marathon, not a sprint. After choosing an investment, the next step is to diversify your portfolio. Now, what exactly does diversification mean? Well, it's a bit like not putting all your eggs in one basket. Diversification is the practice of spreading your investments around so that your exposure to any one type of asset is limited. This strategy can help reduce the risk of your overall investments, as losses from one investment may be offset by gains from another. Imagine you're at a buffet. You wouldn't just fill your plate with one food item, right? you'd select a variety of dishes to enjoy. Similarly, in the world of investing, diversification allows you to enjoy a variety of financial dishes. It's a way to balance your portfolio to ensure you're not overly reliant on one particular investment. But how can you diversify with only $1,000? It may seem like a small amount, but it's more than enough to start with. There are a few ways to go about it. Firstly, you could split your $1,000 across different asset classes. This could mean putting some money into stocks, some into bonds, and perhaps a bit into real estate through a real estate investment trust or REIT. Another way to diversify is by investing in index funds or exchange-traded funds, also known as ETFs. These are investment funds traded on stock exchanges, and they hold assets such as stocks, commodities, or bonds. Investing in these funds gives you a small piece of a large portfolio, effectively diversifying your investment. Finally, you may want to consider diversifying across different sectors or industries. This means spreading your investments across a range of sectors like technology, healthcare, consumer goods, and more. This can help protect your investments against sector-specific risks. Remember, the aim of diversification is not necessarily to boost performance. It won't guarantee gains or protect against loss. It's about balance, about spreading risk, and ensuring you're not putting all your financial hope into a single investment. A diversified portfolio can be your safety net in the volatile world of investing. Investing your money is not a set-and-forget process. Regular monitoring of your investments is crucial. Just like a gardener tends to their plants to ensure they grow, you too must tend to your financial plants, your investments. It's the same with investing. You've put your money somewhere, but you need to make sure it's thriving and growing. Keeping an eye on your investments helps you understand their performance. Are they doing as well as you expected? Are they growing at the pace you anticipated? These are crucial questions that can only be answered by regular monitoring. Perhaps you've invested in stocks. The stock market can be volatile, prices can fluctuate rapidly. Regular monitoring could help you spot trends or changes in the market that might impact your investments. But remember that volatility is part of the journey, especially if you've made sure to make safe investments such as ETFs and other well-diversified baskets. It's never good to panic sell on a market downturn. Historically, panic selling always leads to lower returns compared to just riding the market. Monitoring doesn't have to be a daily chore. Depending on your investments, a monthly or quarterly check-in might suffice. The key is to find a rhythm that suits you and stick to it. Regular monitoring also helps you make timely adjustments and understand different sectors during different economic times. Earn some profits from your investments? Great. Now what do you do with it? The world of investments offers a multitude of options, but one of the most effective ways to grow your wealth is through reinvestment. Reinvestment is the practice of taking your earnings from one investment and plowing them back into the same or different investments. It's like planting seeds from a fruit tree. The more seeds you plant, the more trees you'll have, and the more fruit you'll eventually harvest. You might be wondering, why reinvest? Why not just enjoy the profits? Well, reinvesting your earnings is like putting your money to work. Each dollar you reinvest is a worker that's out there, day and night, earning more money for you. It's the secret sauce that makes the rich get richer, and it's available to everyone, not just the top 1%. Reinvestment can take many forms. You could buy more shares of a stock that's doing well, or you could diversify into new sectors or asset classes. You could invest in real estate, start a business, or even lend your money to others through peer-to-peer lending platforms. The key is to keep your money moving, keep it working, and keep it earning. Think about it this way. If you have a machine that produces gold coins and you use those coins to build more machines, you're going to have a lot more gold coins in the long run. That's the power of reinvestment. However, remember to do your due diligence and research before reinvesting. So let's recap what we've learned today. We've embarked on a journey to understand the power of starting with $1,000 and how it can be a stepping stone towards financial independence through passive income. Understanding your financial position is the first step. It's essential to take an honest look at your finances, identify your disposable income, and decide on the amount you're comfortable investing. Remember, the goal is to invest money you can afford to set aside without affecting your daily life. That's where our first $1,000 comes into play. Next, we delved into the importance of researching investment opportunities. Not all investments are created equal, and it's crucial to do your homework. Look for opportunities that align with your financial goals and risk tolerance. It could be real estate, stocks, bonds, or even starting your own small business. The key is to find an investment that suits your unique situation. We then explored the concept of diversifying your investments. Putting all your eggs in one basket is a risky game. By spreading your investments across various assets, you can reduce risk and increase the potential for returns. It's all about balance and finding the right mix that works for you. Monitoring your investments was our next focus. Keeping an eye on your investments allows you to make timely adjustments and decisions. It's not about obsessing over every single fluctuation, but being aware of significant changes that could impact your investment. Finally, we discussed reinvesting your earnings. As your investments start to generate income, reinvesting that income can lead to compounded growth over time. It's like a snowball effect where your wealth continues to grow, creating even more passive income, and there you have it. With these steps, you're well on your way to earning passive income with just $1,000. This video is for educational purposes only. Please talk to your financial advisor about what's best for you. Remember, the journey to financial independence is a marathon, not a sprint, so take your time, make informed decisions, talk to a professional, and watch your wealth grow over time.